and point, right time for the investors, we are investing in properties. But what time some peoples are investing in RTMI and telling. Returns are not that much what we have expected and someone telling depreciation. In a launch properties, at the time of some peoples are investing, they are getting returns but not up to the mark. Who are investing in EOI stages? They are the real investors. Who are the one who was taking complete packed returns? Sir, have you invested in real estate in previous years? If yes, when you invested, did you actually see the price appreciation immediately? No, right? We usually wait for years blindly. Normally, we pay 40 lakhs rupees as a down payment, sign the agreement, and once it's signed, we are locked in. We can't step back. After that, we just wait. We don't really know how much appreciation will happen. We trust blindly and naturally we stay in doubt. We always think, will this project really give the expected appreciation or not? With me, that won't happen. I have a very good investor's plan for you. Here's the best part, sir. You get a chance to see the price appreciation within just 2 to 3 months. If it is increasing, means how much increasing? You can clearly check with your eyes whether you've invested in the right property or not. And if the property price does not increase, you can cancel the booking and your entire amount will be completely refundable. Do you know the difference between pre-launch and launch? Sir, pre-launch is the best time for investors to buy an apartment one. Right time equals highest profit. For investors, entering at the right time is very important. Pre-launch gives you the chance to buy early and enjoy the highest appreciation as the price grows in every stage. 2. Lowest price. Compared to launch and RTMI, pre-launch always offers the lowest entry price. Usually, there is at least a 15 lakh rupee difference between pre-launch and launch pricing. This lower cost means better returns for investors. 3. Get your preferred unit. During pre-launch, you get first choice of the best units, best views, best floors, Vastu units, best layouts. Later, during launch or RTMI, only the remaining units will be available. 4. Risk-free EOI, expression of interest. The EOI amount, example 5 lakh rupees, is just to show your interest. It is 100% refundable if you don't get your preferred unit. There are no deductions, making it a safe option with reputed builders. 5. Maximum appreciation. Property prices move up in stages, pre-launch to launch, to construction to completion. To RTMI, buying early gives you the maximum growth on your investment. Sir, at this stage, we are collecting EOIs, expression of interest, which simply means showing interest in the project with a refundable amount of 1 to 3 lakhs rupees. By placing an EOI, you get 3 major advantages. Lowest entry price. You enter at the pre-launch price, which is always lower than launch or RTMI pricing. Preferred unit selection. Best choices in terms of east-facing units, Vastu, ideal floors, and views. Higher resale potential. As an investor, your exit becomes much easier and more profitable. In launched or RTMI projects, buyers usually face challenges such as limited availability of preferred units, compromises on facing, floor, or proximity to generators, higher purchase price. And these compromises become a major risk at the time of resale. For example, a south-facing unit or one near a generator often forces you to reduce your resale price, whereas an east-facing unit on the 12th or 13th floor with no obstructions is always in high demand and can be sold faster and at a premium price. That's why EOI numbers are extremely important. At the time of allotment, we generally see around 40% drop-offs. Not because people aren't interested, but because they come late and don't get their preferred unit. When you're investing crores, even a small compromise can impact returns significantly.
We have a special investors plan designed specifically for professionals who want to invest in apartments in North Bengaluru without heavy cash outflow. Normally, when someone thinks about apartment investment, the first thought is minimum 1 crore rupees or more investment and high EMI burden. This plan is structured to significantly reduce the money going out of your pocket. This plan works for 3 to 3.5 years. For example, if you choose a 3 BHK priced around 2 crore rupees, under a normal home loan EMI, we have to 20 to 25% as a down payment for 2 crore property. We will pay 40 lakh to 50 lakh as a down payment and monthly EMI 80,000 to 1.2 lakh. You would end up paying approximately 90 lakh rupees in the first 3 years. Under our investors plan, your total outflow for the same period is around 30 to 35 lakh rupees. How the 30 lakh rupees works. Let me explain this clearly. 1. Down payment. Only 10% down payment is required. For a 2 crore rupees property, that is 20 lakh rupees. 2. Loan and EMI structure. The bank processes the loan in a way where your EMI is only 0.1% of the property value per month for the next 3 to 3.5 years. 0.1% of 2 crore rupees is 20,000 rupees. Every month you will pay for 3 to 3.5 years. Depends on your CIBIL and profile. For 3.5 years, this comes to approximately 8.4 lakh rupees. 3. Total outflow 20 lakh rupees. Down payment 8.4 lakh rupees. EMI for 3.5 years. That's 28.4 lakh rupees, and if we include stamp duty and agreement charges, we can safely round it to 30 lakh rupees. Exit and resale window. You have to start finding buyer. From 3 years, now you will get approximately 6 months time to resell the unit if you're purely investing. Now the next obvious question for any investor is, what kind of appreciation can I realistically expect? North Bengaluru has been witnessing strong year-on-year appreciation due to infrastructure growth, airport connectivity, and large townships. Historically, appreciation in this zone has been around 20 to 25% annually. Based on similar trends, this premium project is expected to see approximately 20% appreciation per year. Over 3 years at 20% per year, that's roughly 60% appreciation. On a 2 crore rupee property, this equals 1.2 crore rupees gross appreciation. From this, let's deduct 30 lakh rupees, your total cash outflow. Around 5% resale related costs, transfer, brokerage, etc. Approximately 10 lakh rupees as per current market. So, 1.2 crore rupees minus 40 lakh rupees equals 80 lakh rupees, approximate net profit subject to market conditions. This plan is ideal for salaried professionals who want maximum leverage with minimum initial outflow in a high growth corridor like North Bengaluru. I would recommend attending the pre-launch event where we explain the plan in detail with bank representatives and clarity.
Now coming to our project. Our project Purva Flow is spread across a massive 25 acres of land. It is thoughtfully designed by considering the lifestyle needs of kids, adults, and senior citizens, offering top class amenities for every age group. The highlight of the project is a grand 1 lakh square feet clubhouse, one of the largest in the segment, packed with world class leisure, sports, wellness, and entertainment facilities. With nearly 70% open space, the community is filled with lush greenery, landscaped gardens, and activity zones, ensuring ample breathing space and a pollution free environment. Every day here, truly feels like a resort style getaway, not just a place to live. Our landmark 25-acre residential development features 8 iconic towers thoughtfully designed for space, privacy, and luxury living. Tower configuration: 2 plus shaped towers with G plus 31 floors, 6 rectangular towers with G plus 30 floors, 6 to 8 residences per floor, ensuring low density and better privacy, infrastructure, and convenience.